So, yeah, it's weird because like what it's a great experience doing a TV program. So I think what you learn from it is that people really think that they know you when they don't. So when you've actually been in someone's living room for an hour every Monday night for a month, they think you're their friend. Yeah. And so when they see you, they embrace you as a friend. And you're kind of like, well, I don't even know who you are. Yeah, so it gets very uncomfortable. And then obviously, with time that dies out. But I had to move out of the centre of London. I moved to the suburbs for a few years. Yeah.
Is there any more questions at this point?
Back in days on the trading floors, when you was trading, like losing or gaining money, have you got like a gambling addiction feeling?
It's hard to say no to that question because you do get those feelings a lot when you're in a very fast-paced environment. The trick is learning how to suppress it and trading in a non-human way. So what you'll realize if you do a lot of psychology work, humans are very bad traders. Because the human psychology is the opposite of how you should actually trade. So all of these feelings that you get as a human, you have to suppress. And that's part of the learning process. And you become kind of hard-coded over many years, where when you get this feeling, you push it away. And then you carry on as you should. So yeah, I can't say no to that question because you do actually get these feelings, but you have to hide them. You have to push them. And then you can go outside the office and do that if you want, but you can't do it on the trading floor.
Yeah.
For the reason you just said, humans are bad traders. For that reason, do you think that the trading industry is at risk of becoming more orientated to using computers that literally use models like the fact they and predict what's going to happen?
Yeah. Well, I would say one thing I've learned in finance and in theoretical finance, the extremes always break the model, okay? So on one side, humans can't trade. On the other side, computers can't make rational decisions, right? In situations where the world is now different to what it used to be the day before. So when big things happen, humans have to intervene and turn the computers off. We're still yet to see whether a computer can trade through a stock market crash, right? And actually make money. So I would say, the industry has definitely gone more computer-driven, algorithmic, more quantitative, yeah? What's that done to the industry? It's taken a lot of the short-term opportunities out of the market. When you see things that happen at the moment in the industry, rental prices around the London Stock Exchange in Paternoster Square have gone through the roof because all the quants traders want the fastest connectivity in nanoseconds to the exchange. Okay, so they can beat the other algorithms. And you see algorithms that are built solely to predict what other algorithms are trying to do, right? So if you're a day trader, what chance do you stand? You don't. Because, these machines are just going to beat you on a normal day when nothing's going on, yeah? But when big things happen, humans have to intervene. The machines have to be switched off. So in terms of the world becoming more orientated in that way, absolutely, it will be, and it will continue. What does that mean for human traders? It means short-term opportunities don't exist, or they exist a lot less than they used to. So you've got to have a much longer time horizon and a different approach. So that's why my approach is 1 to 3 months. I don't need to worry about the machines on a minute-to-minute basis. I don't care.
Last one, just here in front.
As a trader, we probably were working with a lot of past data, using the charts and trends. And was your success due to the fact that you could compromise all this behavioral view, the fundamentals, and the charts?
Okay. Listen, I don't profess for 1 second that technical analysis is not important. It is important because it provides a very good head check to overlay onto fundamentals. So when you've got a fundamental predisposition where you've done all your work on a situation and you believe that something's going to go up massively in the next year, and then you check the technicals and it says you're going to be wrong for the next 2 months, then that goes on the watch list and you wait till it actually turns in your favor. Then you jump in and then all the planets are aligned. So you need to have, that kind of discipline to overlay technical analysis onto fundamental analysis. But then, people who use 100% technical analysis, when something breaks a trend or when something breaks a range, it's happening for fundamental reasons.
Did you come up with your own methodology, or how come you reconcile these two views?
No, I haven't invented a fundamental model. I haven't invented a technical model. I take the best of everything that works and put it into my own processes, my own system. Yeah.
Okay, so did you, by training these people on BBC $1 Million Traders, do you think you sort of gained your inspiration there for forming the Institute of Trading and Portfolio Management?
Well, for a year after the TV programme went out, I actually went and hid in the suburbs and traded with my own money and really got back into that again. But at the same time, I was just getting messages from all over the world. And in total, probably within 7 to 9 months, about 6,000 messages from people around the world saying, can you please teach me? So then I was getting a bit bored, trading from home and spending 1 day a week in the office. So I thought, well, I should actually go out and teach people. So I put together a course, which is basically, I just put my brain on paper in trading and then try to make sense of it and put it in a language that everybody would understand. And then went out and did like a 10-week tour of the UK, starting in Glasgow and finishing in London. And the idea with that was to go out and do it and see if people really understood what I was talking about. Because, spending that amount of time on the professional side, when you come out of that and you start talking to normal people about trading who haven't ever done it before, are they actually going to understand what the hell you're talking about? So you have to go and test it, and you have to go and teach people and see what they think and see what the response is. And pretty much after 10 weeks, 90% of everything that I was teaching, people understood. So then I had to rejig the other 10% and then started actually the current situation, which is the Institute of Trading and Portfolio Management.
Okay, so tell us a little bit more about that and what you're trying to achieve for your students.
Yeah, so to begin with, right away, it was just going on the road, teaching to see if people understood. The business was set up literally on $70. So I paid $70 online to get the logo and then called up the newspapers and said, I'm that guy from TV. Here's my 10-date tour of the UK. I'm going to tell everyone how to trade. And then it was in the papers, and then it sold loads of tickets. Yeah. So then organically grew from going on the road and just testing to actually people doing it for real and opening trading accounts and seeing if they can actually trade from what I've taught them. What it's grown into now is we've got over 80 traders where I basically sit in the back and I can see all the positions, and everybody within the Institute who's got their own trading account is just a normal person. They've got day jobs, they're students, etc., etc. The objective is always, number one, the community has to make money. So overall, the community is up. Because that basically says that what I'm teaching works. There's never been a month in 2 years where the community is down. Second, a very high percentage of people make money relative to the industry average. So I know you shouldn't measure yourself relative, but in absolute terms, the highest percentage possible of people to make money. And then, when you measure yourself relative, you should be outperforming the rest of the industry. So the industry average, believe it or not, is that 80 to 90% of retail traders lose money. What do we do? What do we get? 60 to 65% actually, their accounts are up. And then the rest are either flat or down, but down small. So we try and protect people from themselves. So we don't allow them to take too much risk if they're losing money. Then they learn over time how to protect their own downside and then make money with their own money. So what's actually happened now is that because of track record, you have to trade for at least 12 to 18 months before really someone can turn around to you and say, you're actually pretty good at trading. I'm going to give you money to trade with. Because in the last 12 months, you've made money 8 months out of 12. And in the months where you lose money, you do the right things. In the months that you make money, you do the right things as well. So you have good behavior as a trader. And out of the 100 trades that you've done in the last 12 months, you've got a win ratio of 55%. And you actually suit other metrics as well that we measure you on in the back end of the system. And now what we do is we either give people money to trade ourselves after 12 months or from external investors, or we take people's track records and we sell them to hedge funds. And the hedge funds pay us based on the guy coming in as a percentage of their basic salary over 2 years. So not out of the basic salary, but measured against it. So if somebody gets paid £250,000 over 2 years, our consultancy fee to the hedge fund can be £125,000. So what this does for us is great, because in terms of education, there's no hiding. It has to be good, because when I go and see the hedge funds and say to them, I've got a guy here who in the last 12 months has done well, made money, I think you should take a look at them.